Hello guys, hope you are doing well. So for today, as usual, we will be having some questions and answers as usual, and we try to see different things. So I'll be just waiting for the guys to come, and then we can begin our session. I hope you have done good results in this January and February, especially February, where we have a lot of volatility in the market. After a few minutes, I will show you the market, since I am following it for a long time, especially at the end of January, when I have done the live session and I told you what you do if there is a correction or there is a crash. And after just the next week, just the beginning of the week, things begin to go bad into the market, and still investors have lost a lot. Okay, but still we are still there is the reverse, and we are looking for the market very tight. But understand that stocks are not following the indexes, all of them. Okay, some are following, others they are not. So the people who are following and speaking about the for example, they are thinking that if the market today is good, like the index, like for example Dow Jones, if it is good today, that means that everything is good. This is not true. Hello, Robert Polo. He say, hello, I am bullish. Now, this is what I am just talking about, Robert. You say I am bullish. Now, bullish, what does it mean? It means, are you going to take any stock and the stock will go up because the market is bullish? No. Okay, so this is no for sure. So there are as I showed you in the, since we are following the correction, and then we have a reverse until the market has gone above the resistance line, and that way we say that we go for the trend, for the big trend in the stock market. But right now it is still going up and down. And Robert, I had made a lot of videos about the Dow Jones. I will, in a few minutes, I will show the Dow Jones, and I will explain a lot of stuff as I think. Okay. Hello, wise man. He say, hello, Karim. Good evening. Clocks go ahead by 1 hour, a few hours after midnight. I have no idea about the clock, no idea. So what does it mean? Hello, Nasdina Nochi. Thank you for coming on time. Today you come on time, which is very good. So hello everyone here. And as I told you, I just will be waiting for some time, and then I will show you the Dow Jones, what is doing. In the whole, I have made videos the whole February, and now we are in March. Okay, so still the market is very volatile, and we see that stocks going up, going down. But in general, it's the mood of the market which is volatile. But don't think that all the market is volatile. Some stocks are going up into a trend, and they don't care about this whole market thing, because some people are buying where the people are looking for news, and too much news makes you confused. For me, when I see the whole indexes, it is just to get me an idea, general idea. But for me, I don't care. I don't care about this market, because as you have seen me, just 2 or 3 weeks ago, I bought YouTube, I bought Twitter, and after a few days, I got a gap up. I made money, okay? But those days, the market was going down. So understand that it is not everything that it means that the market is doing good, and that means that the whole stocks are doing good, because the buyers sometimes are different. That's why you see some stocks are going into a trend for a long time and no one hear about them. It's just because most of the time where the mutual funds are buying or the big guys are buying, the analysts we never try to speak about why these stocks are going up. They don't. It is not in their interest, because no one has paid them to talk about these stocks. But when the stock is going into a trend after like 1 year or 1 year and a half, and the trend has already finished, and the big guys want to sell, at that time they say, oh, this company is excellent, it has good earnings, and it has 50% last year, and they want to ask people to buy. At that time, understand that it is a sell-off. So, how are you, Touring Talkies? Hello. Can you explain the candlestick pattern and how to identify the market trend? I am from India. Okay? And Touring Talkies, according to what I do, it means according to what I trade, I don't use patterns. It means you see this and you see this and you do this and you buy here and you don't buy here. No, we don't do that. For me, I have a signal. So this signal is some criteria that you should know. I have only 2 criteria to get stocks, a list of stocks daily at the end of the day, let's say at 3 o'clock. And then from these stocks, I choose what is the best chart. These are criteria. So, but this, understand, Touring Talkies, these criteria are part of training. So I can't explain my training here for free. Okay? So, Touring Talkies, you can begin and get you can get the first training, which is free. Go get it. Okay, I just put it here for you guys. Okay, so here we have my website. You go to training level 1. It's for free. You get to know my strategies and how my strategies are different from other strategies. Okay, so this is my website. This is my email. Okay, so I will show you in the training the candlestick, the criteria that you should use. Okay, and either you can take a subscription, $25 a month, or you can take from 1, you have it for free, training level 1. You should need 2 and 3 and 4. Okay, training 2 and 3 or 4. If you don't want videos, you can get ebooks. They are cheaper, 80% cheaper. So try just to get those and try to have a solid beginning for this year 2018. Now let's go to Robert Polo. He say, I want to get long on the S&P 500 index Monday. Maybe Nasdaq is the strongest at the moment. How do you identify the big money going into your stock? Okay, I just try to explain to Touring Talkies about how to spot even trends in the indexes, because it's the same thing. The index, it's a collection of stocks and it gives you the average, and you can't buy the index, so you are going to buy the ETF. Okay, so if you are buying the ETF and you want to buy an ETF and to leave it, it will give you whatever the market is giving you, like the index. Okay? So, if you are going to invest in S&P 500 or another ETF, it means in another index, it's your opinion. But for us, how do we do that? It means we should have signal to buy. We don't just go and buy randomly like this. Okay? We have signals. It means we buy on the first day we have the signal. Now you say to me, oh, what's this signal? Okay, it's in the training. So it is criteria that we choose because an index is having what we call ETF that tracks it. And ETF, it is like a stock. You can buy it, you can short sell it, you can do whatever. Now, if you want to buy it, there's signals that we have. These signals is very easy. I show you into a diagram how to look at this and how to find any stock. You bring any stock, you put my criteria, and you will see if this is good to buy on the first day, because you should follow these things. Now, for stocks, we have stock screener. I put my 2 criteria. We have a list at 3 o'clock in the afternoon. And then this list, let's say 10 stocks or 20 or 30, we go one by one and we see what is the best according to other criteria. So for me, I am a chartist. It means I base my strategies on signal, okay? And on the first day I buy. I don't buy like 10 days or 5 weeks or 10 weeks or 20 weeks after the trend, okay? You can still buy, but it's too late. Hello, Rahmatullah. Modi, how are you? We have Trump. How are you, Trump? How to know that an IPO is a buy? Yes, Trump, I just say, there is a signal. This signal is based on 2 criteria in order to have the list of stocks, and then you should have other criteria to find the best chart to buy. Okay, so this is in training level 2. Either you can buy an ETF, you can buy an ebook, my ebook, which is training level 2, which is the cheapest, or you can see what we call the training level 2 by videos, or you can see my subscription, which is easier because you will have 4 training for free, 1, 2, 3, 4. And I have weekly search. I will show you how to search IPOs, how to search penny stocks, how to search big stocks, any stock that you like. I will show you how to search from industries, from sectors. It's all easy, okay? But it needs practice. So your question is just a general question. I answer it in my training, okay? Hello, Chris Johnson. Kareem, what is a covered call? Oh, you are going to 2 options. Okay, so Chris, if you want to sell calls, not to buy them, okay, not to go and to buy. For example, let's say Twitter. You want to buy a call from by Twitter, you see the chain and you find the strike and you buy it. But if you own Twitter or you own another stock, you can sell calls with a premium, okay? But understand there is always a risk. So what you should do, Chris, this is very simple, okay? You should call your broker if you have, because each contract is 100 shares. So you should have at least 100 shares of a stock that you don't want to sell. Okay? For example, you are investing in a company for many years and you want to let people bet on the stock if it goes up or it goes down, because calls and puts is just a bet. Now you get the premium. They give you the guy who want to buy from you the calls. Okay? He will give you money, and this money will be put into your account, which is very good. But understand that if your stock is going so good, you are not going to take that money. That money belongs to the other guy until he sold that shares. It means that call, which is 100 shares, and your 100 shares comes to you. Okay, but as you can see, you have already got the premium. So as he bought it from you, he will give the shares as it was. Okay, so this for you, Chris. The best thing you can do if you want to sell calls is you should call your broker. He will tell you how to sell it and which price that you want to sell and how much you get. Okay, this is if you are a seller. Now, Talkies said, "Thank you so much for explaining in such lucid manner. We'll go through your website, eager to learn more." Yes, Talkies. Okay, try just first to take the first training level 1. The first that you find is called training level 1. It's for free. Just take it and see if it is good for you. Because for me, I am based. All my strategies are based on signals, okay, and criteria. When you find a good chart with a signal, we buy it on the same day. Okay, we don't buy it on the 3rd day or 4th. It means we are following trends. So the first day from the trend, we will be in. Okay, and you can do searches. Okay, you can do searches daily, because the stocks, when they are ready to be bought on the signal, it is daily. Each day you find some stocks. So all the stocks are not on the same day. So that's why you should practice. Whenever you find something good, even if it is a penny stock, let's say a stock that it is $4 or $5 or $2 or $3, even if it is a small, like $6, $7, $8, $10, you can buy it on the signal. And if it goes on a very long trend, you will have all the money of the trend. Okay? Hello, Yay Play. Hello, Wandy Casa. How are you? How you put stop loss on shorting stock? How you put stop loss? Okay. So I will answer Wandy Casa. How you put stop loss on shorting stock. Okay. Wanda Casa, before we begin speaking about shorting stock, I have a training which is called training level 11. How to sell short a stock. Selling short, okay, it is not an easy one. It is an advanced for advanced students. If you are just a beginner, when you want to do short selling, you are doing day trading, for example, try just to buy few shares. Don't buy too much, especially when it is a penny stock. And don't hold for tonight. This is very, very dangerous. Okay? Now, let's, Wandy Casa, stay with us. I will just go and I will show you how, just in general, how to put the stop loss, because stop loss, it should need calculations. Okay? I will go just to show you with the diagram. Okay? So, let's see a stock here. Okay, a stock here. It was going up, and then it begins to go down. Okay, let's say the stock here was $20, and here it is $19.95, and it goes to, let's say, to $19. Now for you, you want to do what? You want, at the end of the day, let's say at the end of the day, you want to sell short the stock. Sell short. Okay? Whatever price you choose, let's say you want to sell short at $19. Now, if the stock is going down, this is the direction, okay? This is, you are going down, so you are making money. If the stock is going down, you make money. Let's say it stops here at 18. Now, if you buy back, it means because you borrow the shares, you sell them, you sell the shares, you buy them back, so you will get, if you buy 100 shares, let's say 100 shares, okay, 100 shares you bought them, so you are making $100 in this trade. Now, if you tell me, for example, where I put my stop loss, you should put it in the opposite direction. The opposite direction, it means if the stock is going down, you don't put stop loss here. You put it on the top here. Let's say 19.25 cents. Here, this is where you put your stop loss. This is just an example, okay? It doesn't mean that you should put in 19, 20, 25. This depends on, you should calculate your risk. Now I have training level 6, which is called how to calculate stop loss. Now, why we put stop loss? Because let's say you buy here at 19, the stock has been going down, and then it goes up again against you. So when it reached $19, this is where you bought, where you sell short. It's okay, you don't lose any money. But if it's going up against you, you begin to see loss, minus. Let's say if it goes to 25 and you have bought 100 shares, it means you will be losing $25. Okay? This is if you put stop loss at 25 cents after 19. Now, if the stock doesn't go up and it's going down, okay, it's going down at 18, and then you sell here, it means you buy back. It means you exit the trade, okay? So you will be making $100. So the stop loss is, you should be opposite direction. If you think the stock is going down, you should put the stop loss above where you bought. Because if the stock goes up again, okay, it doesn't go down. What does it mean? It means that you are losing money. And if it continues to go up, if you don't put stop loss, let's say you don't put stop loss, let's say the stock is going down and then it goes up again to 20. Okay? From 19 to 20, you will be losing $100. If the stock goes more and more up, you will be losing more and more and more money. So that's why when you do a day trade, you should always, when you buy, put where is your stop loss and see how much you lose if the market is against you. Because understand, this is a trade. The stock can go down, can go down, can go up, can go down, can go down, up. So no one knows. Okay? So this is about stop loss. So it will be the opposite of your direction. If you think that the stock is going down, you should put it above it. And this is how to sell short and where to put stop loss. Okay? So hope Wondi Casa, hope you understand this shorting the stock, but understand, this is, I'm telling you, Wondi Casa, I'm telling you something very important. Selling short is for advanced students. It's not for beginners because it is risky. Okay? Don't see other videos online and say, oh, it's just very easy. Yes, it's very easy to do any trade. But the problem, sometimes, especially for penny stocks, don't play with penny stocks when shorting. It is so dangerous and so risky. So in order to understand this risk, I know maybe it is vague, or you understand something about penny stocks, or about shorting selling short a stock, but you should try to see a training level 11 and try to understand what is your risk and how much you risk in each trade. Hello, Ye Play. Robert Polo say, I am interested in $25 subscription. Yes, because see, Robert, you will have 4 training for free. The first one is free, but the other 3 is free. I do a week search and I do a lot of lessons each week. Now we have hundreds of videos. If you want to watch those just lessons, you will find a lot of lessons. So what you should do, it is just you go to my website and you just click the website, and you will find the subscription at $25, and you click it and you subscribe. Now, hello, Brian Aguilar. How do you know how many stocks? How do you know how many stocks to short? Brian Aguilar, your question is very general. Most of the time, the people, when they short, you short only one stock. Why you should short many stocks? This if you have a very large account and you are experienced trader and you can do many 2 or 3 or 4 shorting stocks at the same time. But as a beginner, I told you, don't try to sell short many stocks at the same time, because it's so difficult to follow them. It needs a very, very quick thing in order to handle all this situation. Now, if you are asking, for example, which stocks to sell short, okay, any stock that is going down, you can short, but there are techniques that you should use. I will suggest to you, Brian Aguilar, try to check training level 11, how to sell short a stock, and then you can understand how to sell short, what stocks to look for, and what are the criteria that you choose in the stock. Okay. Hello, Chris de Guzman. It's a long time I haven't seen you, man. Brian Aguilar said, is it depending on how much money? No, it's up to you. It's up to you. You can short 1,000 of stocks, but you can't, because you don't have much money. Second, why you try to have a lot? If you are a beginner, try only to do 1 in the morning. 1. Focus on 1 only. If you are good, you sell short a lot and you are good, you can do 2 or 3 stocks, but you should know what you are doing. Okay, you should be quick. You should have maybe 2 or 3 screens, because you have 3 stocks. It's very hard. Okay, and it doesn't matter if you are making money from 1. Why you have 2 or 3? Okay. Juan Casa said, let's see here. Sorry, I haven't seen other people. Okay. Hello, James Armstrong. How are you? Wiseman said, Kareem, another term for stop loss can be start save, because when you use stop loss, you start saving money. Yes. You know, stop loss is just to protect your trade for a big loss. And you always try to control the trade that you are doing. Don't leave it like unattended. Okay? You buy a stock, you don't put stop loss. It's going down. You don't care. It's going down more and more and more. And instead of losing $100 or $200 or $300, you end up losing $1,000, $2,000. And then because you feel the pain and you don't want to exit, you wait more, and then the stock will be going more and more and more, and then you will have a very, very big loss, and you are determined to exit the trade. This is how the beginners, they lose a lot of money in each trade. And if you do this, believe me, at the end of the year, you will lose all your money. Let's take some coffee before we continue. So let's see what the people are saying. Wendy Casa said, what is a good stock screener to use? See, Casa, it has nothing to do with the stock screener. If you put stock screener in Google, you will have 5 or 6 or 7. It's not the stock screener. It is the criteria that you use and what you are looking for. So what I suggest to you, just go to Google, put stock screener. You will find a lot of stock screeners and see them and choose anyone. Okay? For me, personally, I use Finviz. Finviz.com. For those, I use Finviz. You can use it. It's a very good stock screener. No problem with that. Now, this is for you, Casa. But if you want, Casa, if you want to know my strategy, just begin with subscription. It's just $25. You will have the stock screener, what criteria to use, and each week I will show you how I search for stocks, and you do the same as me, and you will have all the training for you, and you just begin to search for stocks. Okay? So Brian Aguilar said, let's say I have one stock I want to short and I have 2,000. How many stocks should I short? Oh, yeah. No, I think you are mistaken. It's not stocks. You are telling me how many shares. So I will just try. Brian Aguilar, I will try to explain to you, because you use some words that are false. We don't say stocks, but we say shares. So let me before yes, shares. Sorry. Okay, let's Aguilar, wait for me. I will explain to you, man. I will explain. Okay. You have $2,000. Now, $2,000 is a very small account. It's a small account. Now, let's say XYZ, a stock is called XY. These are just examples. Number one, you have a stock that it is called XYZ. Stock number two, it is YXZ. And the third one, it is ZYX. These are just examples. Now, let's say if the stock is $20, how many shares you would sell short or you buy? How many? It's just 100 shares. Okay? Now let's say if the stock is only $10, 10 out of this 2,000, you are buying, you are selling short 200 shares. Now, let's see, this stock is $5. Okay? How many shares you can sell? 400 shares. 400 shares. It's just you just divide 2,000 by the price of the stock, and you will get the shares. This is very simple. It's very simple thing. Okay? Now, if you want to sell short two stocks, one is 20 and one is 10, but you have only $2,000. So what you should do? Okay? So you should buy fewer shares from here and fewer shares from here. Okay? So this depends on you. And since I see that you are a beginner, try to be very careful about selling short. Now, why I say that? Selling short is not for beginners. It is for advanced students. Advanced students. You, as you are asking me, you are a beginner. Okay? You are a beginner. So when you are doing selling short, please try not to buy a lot. Just buy little, because you are training. And don't hold for overnight. Overnight? No. Don't do that. Okay? Don't do that, especially with the overnight. Don't hold stocks for overnight if you are selling short, because you are new, you don't know what you are doing, and you can have some problems later. Okay? So thank you very much, Aguilar. Thank you. Let's see here. Robert Polo said, I am adding around 1,000 to my account every month. I hope it will be big after 10,000 to make good profit. Yes, this is you are doing a good thing, Robert Polo, because you are making your account bigger and bigger, and you can buy more stocks. Okay? And maybe in the future you will be buying bigger and bigger stocks. Not to be always with smaller stocks, which is very good. Saving money into your account, it's like when you save for your retirement. It's the same thing. It means you are putting too much money each month, okay? And you make your account bigger and bigger. Because when you are good at trading, what is the thing that you need most is money. When you are a beginner, it's not important when you have money or you don't have money. But when you are good at trading, the only problem that faces you, what is it? It is money, lack of money. Some people, they do a margin account to double their money, but it is not enough. You should have your own money, and it should be bigger and bigger and bigger. So save and save and save, even if you don't trade. It doesn't mean that when you put $50,000 or $100,000 that you are going to trade all that. No. You can put 100,000 and you trade only 10,000. No, there is no one who obliges you. Your broker does not oblige you to trade. And if he charges you not to trade, stop this broker and change it. Okay? If a broker put in your account there is fees, for example, inactivity fee, there are some brokers who, when you don't trade a lot, they will put a fee on your account. So if it is the case, change the broker, because you are free. Okay? Don't let some people influence you and push you to trade. Don't trade if you don't want to, or you are new. Trade just a little bit until you are confident and you can do better in the future. So, Robert, you are doing something good, which is hey, Trump, this word schmuck, I don't know, I think it's a bad word, so please don't put it. If you put it another time, I will ban you. Okay, so I don't want words that are bad in my chat room. Okay, so Brian Aguilar said, that happened to me last week, $200 loss, but it was a lesson learned. Yes, you Brian Aguilar, you will learn a lot, but when you understand what's going on, how to put stop loss, how to make positions into your account, when to trade, when not to trade, how to follow the trend, all these in the future, will help you succeed. But if you are just buying and selling and taking techniques from there and from there, you will always have problems. Because either you should take the training as it is and you should develop yourself and practice. Now, Brian Aguilar said, let's go continue. Thanks for all your valuable information. Brian Aguilar, I'm always here on Saturdays at night. And if you have more questions, just ask. And I always put my website and my email, especially my email. If you don't find me, you just send me an email, and I will be with you after that. Hey, Javed Iqbal, how are you? James Armstrong said, what attracted you the most to swing trading versus other trading methods? Okay, James, this is a good question that I want to answer before I go to answer Venu Mayudov 987, how to analyze the stock with volume. Okay, I will explain why I choose swing trading and I don't use other things. Okay, so James, stay with me. Okay, now I will tell you in short. Okay, let's say we make a comparison between day trading, okay, especially in stocks. Okay, I'm not speaking about futures or forex. I'm speaking about stocks and swing trading. Okay, swing trading. Now, day trading one, you should be free in the morning. Free in the morning. It means almost all the action in stocks happen in the morning. Now here, swing trading, it is for me, one here, for me, I don't have to wake up early, and I don't care about the morning, what happened in the morning. What is good for me is the before the market close. Before market close. Now for me, I am always at the market from 3 to 4 p.m. This is why 3 to 4 p.m. where I search for stocks and I make decisions. Okay? So I am not in the morning. So this is a good advantage for swing traders. So you can have a job, or you can have jobs, whatever. When you are at 3 and 4 p.m., you can do whatever. Second, you should follow your trade minute by minute. Okay? Minute by minute. And this is a real problem for me because I was doing day trading before. You should be there in the morning and you should follow minute by minute what's going on to your stocks. Now here too, okay, here it is day by day, so I am not worried about what happened each minute. So this saves me time. So in swing trading, save time. Now the third here, your gain, okay, is day fluctuation. Day fluctuation. It means you are making money each day, okay, about the stock that you are doing. For example, a stock goes from $20, it goes to $20.75. So you are competing for this 75. Maybe you can get 50 cents, maybe you can get 30 cents. But here, swing trading, I buy at 20, it goes to 60. So I am following the trend. Okay? I am following the jackpot of the, what we call the jackpot of the stock. I am following when the stock is moving so good into a trend. So swing trading is about trends, following trends. Okay? And this is how we make a lot of money from trends. Now, in day trading, you are making your money from fluctuations of the day. It means the cents that you are following each day. Okay? And you should be there early in the morning, and you should watch your trade. It's a lot of stuff that day traders do. Okay? It's very number 4 is here is very frustrating. Here it's number 4, stress-free. Stress-free, it means you are not worried about what happened in the day. The day can go down or up, like when the trend is going up. It can go up, go down, go up, go down, go up, go down. Now, for me, I am not stressed at all. I am looking for the trend, for the whole money, which is the jackpot. Now here, fluctuation of the day, it is very frustrating because you are going to face professional traders. The whole world is, some are shorting, some are going long. We have a lot of problems, a lot of volatility in these stocks. Okay, so hope this will make you understand why I choose. And there is another thing you don't might know, is that here the thing is, I have free time. It means a lot of a free time. In this free time, I can do other things, hobbies or other things that I want to do. So I have time to do that. Now, if you are a day trader, you should be always in the market, especially in the morning, at noon or the afternoon. If you are following a good thing, you can stay hours. Okay, you stay hours following your stock. Now here in swing trading, you have free time, and you can do other things, other hobbies or other pastime. Okay, so thank you very much for your question. So let's go and see the questions. Venu Madav 987, he says, how to analyze stock with volume? See, Venu Madav, I don't use volume to trade. Most of the people who use volume is the day traders. For us, we are short-term traders or swing traders. We follow the trend. Okay? The volume is high or is little, we don't care that much. Okay? So, but most of the time there should be some volume because of the bid and the ask. If you know what are they, the bid and the ask. So I don't use volume. So if you are asking me, are you using the volume for stocks? I say no. Okay? So that's good for you. Now, Javed Iqbal said, what do you think about Nasdaq, which is as high now as before the correction? Do you think QQQ is on track to go up or still in danger of correction? Okay, let's, Javed Iqbal, let me go to the chart and see the QQQ. Okay? So let's go and see QQQ. Okay. Yes. You are right. You are right. This is the resistance line. This is the support line. Yes, the power shares QQQ trust is going above the resistance line. So if it continues, what does it mean? If it continues, what does it mean? It means the long trend that you see can continue going up. Okay? It can go up, reach the line, and can continue. And you are right. But if we go to see the Dow Jones, the Dow Jones is still, and last video I have done, when we have 4 days, which are the whole week, which is going down, I said the stock may be going up or going down to reach, but it seems to me that it's going up, and it's very good, okay? So it might go up or go down, but I understand that for me, when I trade, I see the chart and then I make a conclusion, okay? So if it goes above the resistance line here, the trend can continue for the Dow Jones. It can continue. Excuse me. Okay? It can continue. But still, right now, we did not reach the trend line. Okay? So we should wait for next week or the other weeks. Because the Dow Jones stocks are being going down, going up, going down, going up. So it's not yet. So hope you you get an idea of the Nasdaq. Okay. So let's see some questions, some other questions. Please bear with me. We have a lot of questions today. West Place, how are you, West Place? I haven't seen you for ages. Have you ever been in a position in which most were going down but the market was going up? Have you ever been in positions in which most were going down but the market was going up? If so, did you wait till being stopped out, or did you just manually exit and get into another position? Yes, here you are asking me a question. Okay, if I have been into positions and the market, it means the index is going up but the stocks are going down, what should I do? So please, West Place, when we speak about index, first you should understand, is your stock belong to that index, yes or no? This is the first thing. So let's explain for you to understand this. Okay. Now, before we go, when we say the index, which index are you speaking about? Now, if you, for example, you tell me, oh, I'm speaking about the Dow Jones. Now, Dow Jones, we have 30 big companies, 30 big stocks. Now, if the 30, the index is going up for the 30 big stocks. This is the Dow Jones, okay? It's going up. Now, on the other hand, this is the Dow Jones. Now, on the other hand, here is your stock. Your stock, it was going up, but now is going down. Okay? So, first, the question that you should ask yourself, is your stock belong to the 30 stocks, yes or no? You should always see what is the index that your stock, if it doesn't belong to Dow Jones, you should see the industry that belongs to. Now, why? Because either the industry is going down also. Okay? Maybe this stock that you bought, belongs to an industry that is going down, so this stock is going down. I give you an example of in the past about the energy sector. Have you seen the energy sector where all the stocks have been going down? This is what happened. Although the market was going up, the energy sector was going down. So if your stock from energy sector, it was going down at that time. Now for me, I have a rule. I put stop loss and I stay. So I stay until I exit by stop loss. Stop loss exit. So I don't exit at random like this. Okay? So hope my answer will be fine with you. So worst place, I just put stop loss. Okay? I just put stop loss because I calculate my risk. But most of the time, I don't buy once all my stocks in one sector. This is another thing you should understand. Diversification means that when you want to buy stocks in swing trading, don't buy them all in the same industry. Because if the industry is going down, all your stocks will be going down, and this is a problem. So understand how I trade. I trade with different industries, different sectors always. For example, when I buy, you will find my portfolio full of stocks, but different sectors, different industries, all different. Okay, and most of the time, it's the way I trade. So just to have an idea that I am not buying from the same industry. Okay. So another question from James Armstrong. He said, "Great, thanks, man. I think I am going to try out swing trading soon, and I will then subscribe to training." Yes, you can, James Armstrong. You can either do the golden subscription, which gives you the 10 training levels for free, and you have the weekly search, and we have lessons. You get everything. So you begin just when you are ready, just do the subscription and begin to study and practice. But if you don't want to go closely and to study each day or to study each week, try to order training one by one. For example, training level 1 is free. Go to training level 2. Study it for 1 month or 2. How to search for stocks with a stock screener. Now, when you are done with that, try to practice. Then you go to 3, you go to training 4, and this you will train and practice at the same time. Okay? Without the need to do subscription. And you will hold these videos forever. Wherever you have the account, you will be having all this together. And it is not that you are trying day trade and then you try swing trading and then you try investing. No, this is not the way we do business. You should focus on what is good for you. Is it swing trading? We follow trends for 1 month, 2 months, 6 months, 7 months, 8 months in one stock. Whenever you buy a stock and it is good, you leave it and you follow it with some techniques. That's it, what you should do. So it's not a big deal. But if you are going to do day trading, you should know all the techniques of the day trading. You should be in the morning. You should follow stocks. You should follow the news. You should follow the volume. You should follow what's going on in the market. If you see bad news about the market, about a stock or a company has bad news, and then you see in the morning if it's going down, you short it. It means like this. That's why I don't do day trading, because I don't want to see news. I don't want to see people talking about things. I don't care. I don't care about volume. I don't care about stocks that have problems. Because if the stock has problem and is going down, I have my stop loss and I exit this stock and I buy another stock. I don't care. Okay? I don't have feelings. I don't have feelings towards stocks. Stocks are things to make money for us. They are not a human being that you should love a stock and you get married to a stock and you stay 100 years with the stock. This, if you are an investor, it's okay. And if it's giving you money and it's going up, we have dividend and it's going up and you are always making money and you have a big account, yes, this is good for investing. Okay? But if you invest in a company that it is going down and down and down and then go bankrupt, you lose all your money. And this is as simple as that. Okay? So let's drink some coffee and then I go to Robert Polo question. So Robert Polo said, do you use strategies to buy more if the goes down initially and recover from the loss? Do you use strategies to buy more if the stock goes down? Oh no. This is called, Robert Polo, this is called average down. I will explain to you. Just bear with me. Now this is called what you call averaging down. Average down. Okay? Now let's say a stock was going up, you buy it here at $20, and then when you buy it, the stock goes down to 15. So you buy here, buy more. Okay? And then from 15 it goes to 10. Buy more. And you think that if you buy more at, let's say you buy here 100 shares and here you buy 100 shares, it means you have the average here, which is 15, 16, 17 and a half. This is your average. And you think, this is the thinking, that the stock after 15, it goes up, it reaches 15 and a half, and then here you begin making money. Make money here. Make money. But the thing you don't understand is that when you buy 20, you buy 15, you are adding to a loser. Adding to a loser. Okay? Adding to a loser, for me, I don't do it. I don't do this. So you ask me, Kareem, what do you do? So for me, what they do is this. Okay? Here is $20. Let's say I bought a stock at $20. Now when I put stop loss here. Let's say stop loss, for example, stop loss at 19. Just an example, okay? Stop loss. Now, if the stock goes up, I make money. If the stock goes down and it hits my stop loss, I exit. Why I exit? Because I don't want to have no big loss. This is the secret of trading. This is the secret. The secret is no big loss. I want just to, let's say I bought 100 shares. Okay? I bought 100 shares for $20. I spent $2,000. But what is my risk? My risk is $100 I risk in this stock. This is my risk. I don't want to, if I don't put stop loss and the stock goes to 10, how much my risk at $10 if the stock goes down? It will be $1,000 from my money. It means I lose 50% of my money in this trade. Now this This is not a way to do business. This is trading, not investing. In trading, we always put stop loss. But here is the thing, another thing that I might say. Let's say it is in investing. You are investing in many companies, and let's say you have 5 stocks, 2, 3, 4, 5. Let's say you put $2,000 in each stock, $2,000. And let's say the stock, when they go down, you buy more. This depends on you. If these companies are still doing good and they are not making trouble for you. But for me, I do the opposite. If I want to add the opposition, what is it I do? I buy more if the stock is going up. This is what I do. If the stocks are going up, I buy more. Because I am with winners. Try to understand that. I am with winners, so I add. But if those are, let's say, if those are losers, no buy at all. I don't buy more. No, this is a no for me. This is when we speak about investing. There is no stop loss here, okay? No stop loss. So you just buy a few companies and you leave them for 5 years or 10 years or 20 years or 15 years. So this is an investment. You should know the company. You should know what is doing. You should know if it's doing good or bad in order to stay with the company. Okay? So hope you understand my idea about this. Okay? Let's say Vinumada, how to trade in day trading. There are techniques that you should learn, and here in this live session, I don't teach you how to day trade or swing trade. We are just speaking about my strategies in general. But if you are interested, you can check training level 12, how to day trade using the chart and candlestick. Okay, so you should see my training. So this is the only way you can have techniques and you can study them. And this is my website and my email. You can send me, if you don't know the training, I will send it to you. Okay, so Vinumada 987. These are techniques, and you should learn the techniques and you should practice them. And you should know how to go long and how to sell short. So it should be both ways. If the stock is going up, you go up and you make money. If the stock is going down, you sell it short. These are techniques that you should need many months to study and to practice. And you don't have to buy a lot of shares. If you are just a beginner, don't buy too much. Just buy little and try to practice. When you are confident and the techniques are doing good for you, and then you can begin with big money. One D Casa said, how do you know the stock going against you in swing trading? So this is a very good question. How do you know the stock going against you in swing trading? Okay, I will, Casa, I will just show you. I have showed you this before, but I will do it again for you. Okay? Now, so the stock is going up. I bought it here at $20. Okay? Now, $20. This is the price I bought the stock in. If the stock is going up to 21, and I bought 100 shares, so I made $100. So here, if the stock is still going up, I make money. Make money. But when I buy a stock, let's say I put a stop loss. Stop loss, what it does, if the stock is going down, let's say the stop loss is $19. Just an example, okay? Because if you want to calculate stop loss, try to see training level 6, how to calculate stop loss. Now, how do I know that the stock is going against me? It means the stock is going down. From 20, it goes to maybe to 19. Now, when it reached 19, we have my stop loss. I exit the trade. Exit the trade. So is it understood? Casa? Is it understood like this? So it is against me when it's going down. So I begin to lose money. And in your broker, if you go to your broker, you find how much you lose in red. And if you are making money, you find it in green. Okay? So green, it means that you are making money. Red, it's going that you are going to lose money. So let's go down and see what the other are saying. You say Vinoma 987, he says using volume. Now see, in swing trading I don't use volume, but it should have some volume. But I am not because the volume is high I buy a stock, or the volume is low I don't buy the stock. No, I don't use volume. Volume, you can use it in day trading. It's good in day trading because it see the people are buying or selling. Yes. West Place said, how much of your account are you willing to lose per trade? 1%, 2% of your account size, or is it more? So this is a complex question that you are asking me. A complex question. You will never know because you should have how many positions, and you should see if the stock is volatile or not, and you should see your risk tolerance. West Place, the best thing you can do in order to understand how I work is to follow my strategies, because for me, for my strategies, there is no this 1% or 2 or 3. Okay? So because the stocks are not the same. Some stocks you give much room because they are volatile. Some stocks are very they are not fast and they are not volatile. So why you give them too much room? And the whole account, okay, has a relation to the positions. How many positions you have? What is your risk tolerance? I don't know your risk tolerance, so I can't tell you which is 4 or 5 or 6 or 7. But I don't work like this. I work by positions, and each position, position has its own stop loss according to the stock. So I don't have a number for stop loss. I don't have it. So I don't use percentage. Now the percentage I got it later when I choose my stop loss, and then I see the percentage. Okay? So it is a bit complex. So for you, West Place, you can either take the golden subscription, or you can go directly and check training level 6, how to calculate stop loss, and training level 8, how to minimize risk and how to maximize profits. These two training speaks a lot about how to calculate your risk in your account and into your stocks. Okay? But for me, I don't have a percentage. I'm telling you. You are telling me how much percentage, 1 or 2 or 3. I don't have it. So if you want to make it, you will have problems later. You put 1% and you have 20,000 or 50,000 in this stock. And if you put 1%, it will not be good for that stock. The stock needs 10%, for example. So you will have a conflict in your thinking about the account. Because understand that the way I see things are different from what you see. I know you go online and they told you, oh, use 1% of the whole account. These people are speaking about millions of dollars. People who have a lot of money, they know what they are talking about. They should give you all the information in order to understand what they're saying. But people who are just giving percentages, they don't give you the whole truth. They give you one simple truth, what they do, but they don't give you other information. Because the other information are so important to understand what they are doing. That's why you should take a training and stick with one training. Don't go to many trainings. Because if you go to someone, he said to you 5%, you go to another one 10, you go to another 1%, and then you get confused and you will never know what they mean by that. Why? Okay? So West Place, if you are going to do the golden subscription, I will follow you and you tell me how much is your account, how many positions you have, how much is your risk, and then we will discuss and I will give you a guideline what to do. But in general like this, I can't give you anything because it's general. Vinamada, he says, do you use like super trend indicator for swing trading? No, I don't use indicators at all. Okay, I don't use indicators because they are lagging information, because they don't tell you the future. So for me, I have other things to use. I use the resistance lines, the support lines, and my criteria. So no indicator except for the resistance line and support lines and my criteria, because my criteria shows me how to follow the trend or when to exit the trend. I have a trade that it is 5 months and 2 weeks in my subscription. If you get the subscription, you will find this trade and you watch all the videos live. It means each week or each 2 weeks, I make video and I explain what I am doing, at least to understand what's going on. Is it good to keep stop loss as percentage of ATR? No, I don't use ATR. Because my stop loss, I have other criteria to use. I don't use percentage or amount of money or whatever. I have some techniques other than this. Okay? So you can't put a stop loss with an ATR or for all the stocks. Because there are some stocks that go fast. Some stocks, they go slow. Okay? So you can't put stop loss for the same for all of them. So let's go to another questions. Okay, this is mostly the questions of I see right now. It's 1 hour 18 or 1 hour 19. Thank you very much for all your questions. Now, as I told you before, let's go to the chart. Okay, as I told you before, I have made video here before the correction and I say it might have the correction. You understand that here, if we put a line here where the Dow Jones stop here for today, which for yesterday, which is Friday. So we are here. It means people from 9 January, it means it's like 21 days are still lost for those people who are investing for the long run, because it is here now. If it's going up and crosses the line, it means we will have the trend that it is for a long time to go up, to continue. The trend will continue. These are just what we call a correction, okay? And the correction, it stops here. And I had made videos when the market was going down, and I thought if the market touches this line and goes down, I told them it will be like a big correction and it might be a crash. But unfortunately, or it's good, fortunately for investors, the stocks have been going up because DJ, which is Dow Jones 30, it doesn't mean that 30 stocks have been going up all. You can find some stocks that are going down, and I don't know if I can let's say here, let's say if I can find the Dow Jones, okay, let's see. Component. Yes. So this is, I will just see if you don't have more questions, okay? I will just give me some information. I will show you the 30 stocks in the Dow Jones one by one, and we try to study them, okay? Boeing. Okay, now Boeing, it hasn't been that much down. It goes up and goes down again, and so it's pretty good, better than the others. The GS, Goldman Sachs Group, it's the same. It's near here. It's near the resistance line. So MMM, 3M company, conglomerate, is the same as the Dow Jones. It's the same. Now let's see this one. Let's see Home Depot, and we try to see. Okay, Home Depot it stops here like the Dow Jones, and it goes down and it stops, and it goes down and it stops, it goes down and it stops, but it is still in danger. Home Depot is in danger. If it continues and hits this line, it might be having a downtrend. Now Apple, as I told you before, if it crosses, it goes down and crosses and it touches. So for the people who are looking for a thing, it might be next week. Next week, if it goes up, because it touches the resistance line and doesn't go. IBM. Okay, let's see IBM. It's the same. Caterpillar is the same. Okay, let's see McDonald's. McDonald's is different right now. So McDonald's has been going down like Dow Jones. It stops here. It goes up, it goes down, goes up, down, up and down, and there is a gap down. Now this gap down push, it crosses the support line, but it was just it might be earning dates. So when it is earning date, it's just it's not a big deal. That's why the stock has been going up again. So if it continues to go up, it's good. But if it goes down and it hit the new support line here, there will be a problem. There will be a problem for McDonald's. So the travelers companies is the same. UTX is the same. GNG is the same. Normally it's the same. Not the Visa card. The Visa card is doing better. As you can see, it's going up. It's near the resistance line. Okay. JP Morgan Chase. Okay. It's going up. And then it's going down. It's going up. So it's good. It's better than this CVX. It's like the Dow Jones. Disney is a little bit in trouble, but it's okay since it doesn't go down that much. American Express, for all you know, okay, it touches, it goes down, it's out up again. Microsoft, now Microsoft, it crosses, so we should wait for next week. Now Walmart, here is the thing. We have seen the what we call the support line. It touches here. Here we have a gap down. Gap down, it means just because of the news. But as you can see, Walmart continue to go down, although the Dow Jones is stops and is going up. So you see, Walmart is doing differently. So it's not doing the same as the Dow Jones. So this is an indication that Walmart might be going down more and more. Procter & Gamble, always the same. Okay, it was going down. But see, Procter & Gamble has been going up before, so it doesn't do the same as Dow Jones. Now ExxonMobil Corporation, okay, it's going so bad. Let's see what's the day here. Yes, it's doing the same as Dow Jones. It stops and it's at the bottom here. We will never know if it crosses going down. DWDP, okay, is doing the same as the index. And Nike is going down, going up, crosses, go down, cross up again. So it's very volatile, this Nike. Okay. So Merck and Co, you have, see Merck and Co, it has been going down long time ago. It's from last September. So this stock, Merck and Co, doesn't follow the market at all. Okay, you see here double gap downs, gap down here and gap down here. We have a gap up here and then it's going down. Okay, it's doing right now the same as the market, but for me this is not doing that good. Okay, because it has been going down for long. Intel, let's see what it does. Let's see the first 20 seconds. Yes, so it has been going down like the market, but it has already gone above the resistance line. It means that this stock is doing so good right now, and the trend can continue. Okay, the trend can continue. We take this, but you see it's very volatile. So It's very volatile, this stock, the Intel thing. Now Verizon is doing the same as the market, but it's going down. It's not that good. Okay, so be careful of this kind of stocks. Cisco, $45. This is the day before the market go down. This is the correction. Correction stops. It's going up, and we have what we call a gap up, and it is above the resistance line. So Cisco looks good compared to the others. Coca-Cola is going down, as you can see. It's going up, then going down. And Pfizer is going down. It's doing like the same like Dow Jones. Now look at this. What do you remark on this? You see that the GE has been going down for so long. So this GE, which is one of the oldest companies in America, is losing a lot of business. Now for me, I have never seen how much this company make or what is the competition, okay? But for me, I see the stock. When I see the stock is losing a lot of money, it means mutual funds are selling a lot of millions of shares. That's why the stock is going down. And be careful. Be careful. We don't know. We will never know where the stock will go. Right now it is $14.94. And before here, you see it was 33. So from, let's say, from 19 July 2016, okay, like let's say 1 year and a half, the company lost 50%. It's like 32 or 33 to 14 or $15. It means it lost about 50%, and this is so bad. So GE, it doesn't go with the market. Okay? It doesn't go with the index. It's doing the worst in the Dow Jones. The worst. Because it lost 50%. The others, they lost a little bit money, but it's not like this one. So understand that this is the big loser, or the biggest loser in the Dow Jones. Okay, so let's go with the guys. So hope this explanation of what the market is doing, try to understand that each stock belongs to an industry, and sometimes the mutual funds, when they are buying, they choose some stocks and they leave the others. Okay, that's why in each industry you find some stocks are going up, some stocks are going down. Sometimes you find most of stocks are doing good. Okay, and they follow, because they follow the index. Why? Because, for example, the Dow Jones, it's a heavy, they are heavy stocks, well-known companies. Even outside America, they know these companies and they buy them for their retirement, because they say they are stable, they have the test of time, and you know those things. But for example, if you have bought GE, what is this test of time? You bought it and you lose 50% of your money. Okay, so try just to understand how things work. Try to understand that why not everything is going the same. It's just because we have a lot of buyers, a lot of mutual funds, and each one is buying something. Some they like big companies, some they like medium, some they like small, and you will see everything like this. Okay, so try always when you are searching for stocks. For me, I have strategies. Either you buy from resistance line or you buy from support line, not any resistance line, not any support line. So I have some techniques, and I should see the chart if it is good, if it is at the beginning of the trend. Because when you are at the end of the trend, you always risk more than when you are at the beginning. When you are at the beginning and the trend is going up for 1 month, 2 months, 6 months, you have already accumulated a lot of money. And this is what we do. What we do is we have the jackpot. It means we leave the stock, becomes bigger and bigger and bigger and bigger, and one day we exit when we think that the stock is not giving anything. That's why we exit. Now these have techniques. I don't use indicators, because indicators, it is a strategy by itself. And for me, I don't want to import strategies to my own strategy. So I want to see clear. If you follow me, you will see everything clear. Whatever stock you have, if you give me any stock and you say, Karim, what do you think about this stock? I will give you my opinion. I have given you my opinion for the 30 stocks of the Dow Jones, okay, in a few minutes, 10 minutes or 12 minutes when I'm explaining. That's it. This is what I do for all the stocks, so it doesn't take too much time for me. And understand that each stock has a day when it begins to go up. It means the beginning of the trend. Okay? So each stock is different. Not all the stocks they begin on the same day. And when the thing begin, there is a big movement. It means a lot of people begin to see something moving and they buy. They don't know that these stocks will go for a long trend, but make sure that when you have a conviction that the stock is good, for me, I just buy. I don't think twice. And I say, let's wait 1 week or 1 month or 2 or 3 until I see that the stock is going up. If the stock is going up for 1 month or 2 or 3, you come late to the stock. So stop looking at the trends, because if you see the trend, it's over. You are at the end of the trend. And this is, most of the beginners, they don't understand this. They think that when they see the trend, this is the opportunity to buy. But for me, it's the opportunity to exit the trade with a profit, because you should buy earlier. Okay? So thank you very much for all your questions. Please ask more questions. We are at 1 hour 38 minutes. So I'm trying just to explain and to answer your questions. And a lot of guys try to have ideas from other YouTube channels, and these ideas, they are not clear. And if you can just take any idea and you try to practice and use it in your account without knowing what does it mean for you, you will begin just trying things that it will never work. So you should understand. For me, for example, if you ask me any question about the training and you say why you do this, why you don't do this, I will give you the reason for that. Okay? It's not I do something without any reason. For example, you ask me why you don't use volume. Because for me, the volume, it is just to see the bid and the ask. It means when I want to buy or to sell, I want just to see what the market makers are taking from me. Because you are not just paying a commission to the broker. There is the market maker that takes your money, but most of the time the people, they don't know that there are other people taking your money, but you don't know. Okay? So these are the things that you should know about your trading, and this is the thing that you should always pay attention. Okay? A lot of people, for example, they have small account and they use too many positions. And they say, why you use a lot of stocks? Okay, because you will pay more commissions and the broker will be happy with you. And there is another thing that I saw last week is about ETF. I will just try to give you an idea, because a lot of people, when they buy an ETF, they don't know how it works. How is it the same as other stocks? Yes or no? A lot of people, they don't know. So I will give you just an example right now. Okay. So an ETF, which is called exchange traded fund, it is just something, it is a stock, it's the same as a stock that tracks something. It can track an index or anything else. Now last week someone has bought an ETF that tracks futures. Understand that futures are very risky, up and down. Excuse me. And he told me that he was having $12,000. 12,000. Okay? And then in one day the stock was going up, this ETF, and then one day we have a gap down. Now this gap down here, a gap down, and he lost 90% of his money. Now for me it was strange. I say, how you got to lose 90% of your money? And then I told him, what is this ETF? Because I thought it was a general ETF. And then I find it's about futures. Okay? Futures, especially when you find a word like ultra, or you find something like X2 or X3 or whatever, these are very, very dangerous ETFs. You should go and you should see how this stock moves, because X2, if the stock goes, if the index goes $1, X2, it means that you multiply this by 2. If it's going down, you multiply by 2. So X3, you multiply by 3. So understand that there is a big dangerous thing when you are doing ETFs. So always try to see what is this ETF and how it tracks and how much money you can get. If it is normal it means if the stock is going up or going down, you get the same. So this is normal ETF. Okay? But there are some which are futures, or they are called ultra or X2, X3, that triple or double your money. I know you like when your money is doubled or tripled. Okay? But you are not thinking about the downside when there is a gap down and you lose a lot of money. So I asked him, do you just have this ETF? He said yes. It means he doesn't even have many positions. You should always, I always say, and I always repeat, when you have an account, okay, try always to have many positions. It depends on how much money you have, but you have stock, okay, stock 1, 2, 3, 4, 5. It means try to divide and try to diversify. Okay, diversify. It means don't put all your stocks in one industry. Try to change the industries, change the sectors. All this what I am saying here is to minimize risk. Okay, minimize risk, and this is very good for you. If you put all your money into one industry and this industry will have a gap down, you will be losing a lot of money. And this is what I always say to most of the people who are like trading, but they don't know how to deal with their account. Okay, and this is why I put my training levels into 1, 2, 3, 4, 5, 6. It means you should go, each training gives you more information until you get 10 training levels, and this you will have the basics. It means by this you can begin to trade confidently, begin to practice, and you begin to do a lot of things. But in general, you should understand what's going on, because there are something that it is not related to your stock. For example, making many positions or many stocks into your account has nothing to do with your trade, but it affects your trade. Okay, if you do only, for example, only one stock in all the account, you are risking too much money. You can do it once and you make money, but the next time, if there is a gap down and you put all your money, you will have a lot of to lose. Our goal into swing trading or in trading is first to protect our money and then to make money. This is, I will just show you again, just to understand. Okay, now the goal of any trader, what is it? It is not to make money at first. Okay, our goal is to make money, but it is the second goal. Now the first goal is to protect yourself, protect your trades, protect your account. Okay, you should protect your account when you are trading, and this we have a lot of things you should do, and this you can see it in training level 8. How to minimize risk. It's all about risk, and how to maximize profit. Now the second thing is to make money. Okay, so making money has a relation to the first rule, which is protect your account. If you don't know how to protect your money, you can make money, and then number 3, you lose money. So you will be at the end of the year, either you break even or you lose money. This is what happened to almost everybody who are not protecting their account. There are a lot of things that you should do and you should take care of and you should follow. If you don't, you will be either break even or lose money, especially those who are doing a lot of penny stocks. Penny stocks, it needs a lot of things to do in your account. It's not easy, because sometimes you make money, a lot of money, sometimes you lose a lot of money. So by the end of the year, you will be making just less money than expected. Okay, so as I told you before, from all what we hear, the problem is that a lot of people, they try to take techniques, but from different styles. For example, you buy a stock, you are doing a day trade in the morning at 9:30. You think that the market is good, you buy a stock. You don't put stop loss because you know you don't want to. And then the stock goes a little bit up, and then it's going down the whole day. Now, when it is the whole day, you lose some money, but then you tell yourself, okay, I lost some money. What if I hold it for tomorrow? It might go up and cover my money. It means you are doing what we call a revenge trading. Okay, revenge trading. So I will just show you this before we end this session. Okay, so let's say okay, let's say here at 9:30 a.m. so you bought stock at $20 in the morning. Okay, the stock goes up, let's say 25 cents, and then it was going down until it reached 18 and a half. At what time? At 4 p.m. So here, between 9:30 and 4 p.m. the stock was going down. So because you don't put stop loss, so no stop loss you put in order to exit, no stop loss. This is a problem when you do day trading. This is what we call day trading. Okay, I give you just this example to make you understand that when you are mixing trading styles, you will have a problem. Now, 9:30, you bought the stock at $20. It goes to 20, 25. You don't sell. Then it's going down until 4 p.m. Now here, what you are thinking, you say, oh, I have lost money. So let's say you bought 100 shares. So at the end of the day, you lost $150. Okay? So let's say you bought from 20 to 1850. Now you get an idea. You say, okay, since I lost money today, maybe tomorrow it will be better. So I hold for tonight. Hold for the night. Now, the question is, what is wrong that you have done here? You have done many mistakes. The first mistake, no stop loss. The second mistake, you hold for the next, or you hold for the night. It means you begin day trading, and then the next day it should be swing trading. And for me, for example, in swing trading, I don't buy in the morning. This is the mistake. So you are confusing yourself between day trading and swing trading. You are mixing two trading styles. Let's say you lost $150 a day, but the second day the stock goes from 18 to 15, for example. The stock was very shorted and it goes to 15. How much money you have lost? Now you have lost $500 in these 2 days. Okay? So you ask me, what is the best way to do things? The best way is, if you are doing day trading, you should use stop loss. Now, when you use a stop loss, I just give you an example. Let's say your stop loss, an example, is at $19. This is your stop loss. Stop loss. If the stock is going down from $20, 25 is going down, and it hits your stop loss, you exit. How much you lose? You lose $100. That's it. Now, you should wait maybe in the afternoon or next second day to do another day trade, and maybe you make money. This is the right way to do. Now, instead of losing $500 in 2 days, mixing styles, you can lose here $100. The next day, you buy another stock, $20, and this $20 goes to $22, just an example, okay? And you will make $200 in this trade. So, which is better? Is it to do day trade and to focus on day trading, and one time you lose, but next time you make money? Okay, this is how you practice. If you are going to do a day trading, you should practice day trading and focus on day trading only. Don't mix swing trading and day trading. Now, if you are swing traders, you don't trade in the morning, you trade at the end of the day. Okay, these are just something that I want to share with you guys. Okay, to share with you guys, at least you have an idea what to do, and you should always be like knowing what you are doing. And this is the most important thing that you can do in what we call swing trading or day trading. Okay, so you should focus on one thing and try to succeed in one thing. If you want to do day trading, you want to succeed in it, so you should practice as much as you can. Okay, so if you want to do swing trading, you just focus on swing trading. You do 2 months, 6 months, 1 year, 2 years, 3 years. You make your account bigger and bigger, and then you save money, and then you continue with swing trading better. Okay, so we are at the end of the session. Please, I didn't see anyone asking any question. Please, we have few minutes. If you have more questions, please ask before the end of this session. And as I told you before, if you don't have questions for today, okay, you can just go and do the thing. Okay, there is something going on to this chat room. It seems to me when I want to write, things doesn't show that writing thing. So it might be there is something wrong with the chat room. Okay, so as I told you, if you have more questions, you can just send me an email as usual, and I will contact you by email, and they will answer your questions. Okay. There is something going on with the chat room. I don't know what's the problem, but it's okay. So if you are following me, and if you have like more questions, I am always be happy to receive your questions. For you guys who have not seen, for example, training level 1, who are new here, so you can just go and take training level 1, and you can just begin your training or a subscription. Please check the chat room where I put the email and my website, and you can just go from there. So I think this is the end of this session. Okay, and I will see you next Saturday. So thank you very much, and see you next Saturday.